Hey everybody, hope you're okay. I just wanted to come on quickly and see if there were a few questions. Hope everybody's had a chance to catch up on the 5 videos that we created this week, and just wanted to see if anyone had any questions on them. I'll be here for about an hour or so. When we did this yesterday, we wanted to go through. We spent quite a lot of time on one person's questions, so. And a lot of people were in the queue. So just wanted to make sure I made a little bit of time because tomorrow I'm going to be releasing video 5 on funding and clawbacks, and then finally we'll do number 6 tomorrow, and then finally we'll do number 7 on the tax side without giving tax advice. So just before we invite someone up, if you've watched those videos and you have a specific question, please put a request in right now and we'll bring you up. But make sure that it relates to any of the videos that you've watched or any specifics on the recovery plan. Because I've got no content. It's just going to be answering your questions. As a recap, we did 5 videos. The first was on an equitable way of distributing all the funds and dealing with some of the challenges. The second video, what did we do? I can't even remember right now without looking at it. I'll go back to the YouTube. But yeah, let's jump straight in. Anyone want to come up and ask a few questions? As again, we're keeping it on any of the topics from any of the videos. Maybe there was something you didn't understand, something you wanted further clarity on. Maybe you've got a suggestion for a tweak of something you think could be done better. But yeah, put your request in now because I've got no content. It's just going to be what people want to ask and what questions people have. Okay, if no one's got any questions, then this could be a short one. Anybody want to come up? Okay, here we go. First few requests coming in. Normally takes about 10 seconds to propagate. There's a few more requests coming in. Hello.
Hi, Simon. Good morning. Happy Sunday.
How you doing? Did you manage to watch all 5 videos or just some of them?
Yeah, I've watched them all.
Okay. Yeah. How can I help? What's your question?
Yeah. So, what's the next step? I mean, it's we have strategies. We have the community reaching consensus, but we have to basically battle the beast, which is the lawyers, right?
Well, the next step is to get in the bidding process because the consensus that I've come to is that the bid is the bid. But we've got a bunch of reasons why those bids are being delayed. So we've had lots and lots of objections to the bidding process. Celsius have filed for exclusivity extension as suggested. And because they haven't submitted a reorg plan and they have filed for an extension, my assumption is that they just want to drive everyone into the bidding process. And so the bidding process is going to be objected. So when I cover video 6 tomorrow, I'm going to be sharing some ideas around how we could try and fast track that process. Because the desire for we've seen in the Voyager case, for example, that when FTX settled, they've been requesting taking out certain clauses for protection of the senior management. And so I'm imagining that this is escalating as well pretty rapidly. So my assumption is that we've got to get this done through the bidding process. And so, the next step is to get the updated. That's got to go into the courts. They've got to agree that this is the bidding process. They've got to deal with the objections. And I'm going to try and see if there's any out-of-court settlement options using financial innovation for all the different ad hoc groups. So they want to know that whose money is everybody before they can actually go through the bid, is what they're saying.
Oh, okay. I did see I think White and Case filed a motion to modify the requirements of the bidding process. Is that right?
That's correct. Yeah. So they have been, the UCC has been making adjustments based upon like conversations we've been having around how to adjust the bidding process so that it could be more accommodating of the types of things that we've covered in the video series. So that's a really positive sign. So the
Okay.
UCC seem to be doing a great job from my perspective. And yeah, so I think there's some kind of consensus that this is definitely what's best for creditors. So now the biggest switch in my focus is the companies that are going to be in this bidding process. They're going to need to address feasibility, which is they've adjusted, the like Kirkland's filed a motion with their slight adjustments that the bidding process means you have to submit and you have to actually have all the regulatory requirements met. And if you don't meet some of them in terms of licenses, a roadmap for how long it would take you to achieve it. And then it's really important, that those bids come in with well capitalized companies. So I'm going to be sharing a bit of ideas on capital raising on tomorrow.
Sounds good.
Yeah.
Sounds good. Just to help us understand what happened with FTX and all those 30 bidders, was that a closed door deal, and who chose FTX over? It wasn't the community of Voyager, was it?
No, so the way the process works is 30 people come along and say, yeah, we'd like to look at the data room and sign NDAs. And of those, you'll find that a bunch of them are just not willing to put down a big deposit or not willing to make a big financial commitment to demonstrate that they're very serious to be in the bid. And so they look through the data room, they decide whether they want to be involved in this or not. And a bunch of them are just predators, just trying to see if they can accumulate some cheap assets. And then it ends up with, as many as are willing to put down a big chunk of change to demonstrate their seriousness, and an initial proposal. And then the investment bank will then say, right, there are three people. So in the case of Voyager, it was Binance, FTX, and Waves was a latecomer trying to do a bit more of a financial innovation, reusing the assets for creditors. Um, and then they essentially value the offers, and the investment bank will then try and make an assessment of which one looks like the best offer. And then eventually they pick the one that they decide is the best offer. Now,
And who's they? Sorry, who's they?
they is the creditor, so Voyager's investment bank.
Okay.
So in this case, Celsius's investment bank will decide which one they think is the best. Now, there's two ways it can happen. One is that you just get a cash bid, in which case it doesn't go to vote, or you get a cash bid plus a reorg. So what FTX did is they said, let's lock in everyone's losses. So they dollarized, they did it payment in kind and said, we'll take the crypto value at petition date, and we'll lock it in at a predetermined date in the future. And they created a formula so that everybody got a 30% haircut, but they were paid in crypto. So you've got to be really careful about this crypto in kind thing. It doesn't mean you get your crypto back. It just means you get paid in crypto based upon a dollar value. And then when I asked if FTX and Sam whether he'd do the same, he publicly tweeted that he'd look to do a similar thing. So basically, he'd lock you in at 50% depending on the final number,
Yeah.
with no way of filling the hole. So with FTX, they didn't create a way to fill the hole. They got
Yeah.
rid of the VGX token because of the regulatory challenges, is my guess. And then they said, we'll give you some perks. So they paid about
Yeah.
50
Yeah.
million spread across everybody, which doesn't feel much, but it was a smaller hole. And then they said, if everyone comes over to FTX, we'll also give them $50 if they KYC and use our platform and start depositing and trading. So
Yeah.
yeah.
In this case, Celsius has a big advantage because of all the assets that that are basically promising great returns in a few years. This should be a little bit of a difference here, in the sense that the whoever's going to bid plus reorg, and if this entity, I wish for the community to be the ones that are going to bid and reorg, and at the same time offer some capital raise to accompany that, then it shouldn't be too much of a competition of anybody else bidding more than that. Is this correct?
Yeah, so you need to enter the bid, you need to demonstrate that you've got the licenses or your roadmap for achieving the licenses. You need to put the capital down to get in and follow the bidding process. And then you need to put together the best offer. And then the investment bank will need to determine if they're going to take the cash bid, which would be a lower risk approach, or whether they're going to take a higher risk with some of the suggestions. So what I wanted to do in the video series is make sure that people understand how we need to get this game so that we get the maximum result for creditors and not end up giving all our assets to someone else's shareholders if we're not careful. And so that was the point of the video series.
Yeah. And lastly, before I get off the stage and leave people space here, so it looks like Zach, you, some other leaders of the community will be meeting with the UCC in the coming days. And as I said yesterday, it would be great if we can have an outline of action items that will be discussed during that meeting, and then a summary of that meeting. Some people said that even that meeting can be made public through some type of live recording or something. What do you think would be a good idea to go about that meeting? What strategies or what type of scenario or situation do you foresee during that meeting going on?
I believe that meeting will. So, firstly, it's just I was invited. It's not my meeting. I think it was Mark, the lawyer, that arranged it.
Correct.
Yeah, I was asked to attend. So, be happy to do that. But I think the outcome of that meeting needs to be that the UCC will probably say your best shot at getting this is, just doing one bid. Because as a community, I don't think we've got enough to have separate bids. And so that, but if that's the way that it goes, that's the way that it goes. So I think as a community, I think we need to reach some kind of consensus. So on the AMA yesterday, I went through with Zach, who had another plan. Like some of the things are similar, some of the things that are different, and I'm hoping we can reach consensus on the right way of doing this.
And I'm sure we will. And I'm sure we will, because if not, we're going to be handing our assets to FTX. And I don't think anybody in this room, anybody in the community wants to do that. Sorry to cut you off.
Yeah, no, we absolutely have to have, exactly the best that we can offer to the community. And if we argue too much around it, then we may end up with, the worst of what we want, what we don't want. So I think if we want the mission to continue, then that's what we've got to do. And that's what I believe the process is from here.
Thanks, Simon.
Okay, I let a couple more people up. Who's next?
Simon, that's Alex. I have a question concerning the cell token, and I know we are going back and forwards with this. Please let me that you can make me understand. Currently, I don't know how much the cell token should be worth. Some people talk from zero, right? Again, how do we solve this problem? I know the community does not want to have the cell token anymore. I know also with when we move with your company, there is no place for the cell token. But because you said, okay, it was determined with 70 cents on the dollar as we entered bankruptcy, right? And now just make the math. How many cell tokens are there times 70 cents? How many million do this actually mean then that we would have to write off or whatever? Or could we even make it to be fair to the cell token holders? And I'm also a cell token holder, but again, I actually don't really care about it. I just hold it for the tier cases and all that stuff. Do we go with the price of the ICO, which was, I think, 30 cents?
You can't. It's bankruptcy case. You can't change the law.
So
you can't change the law. You have to use the price at petition.
Okay.
if you want to do bankruptcy law reform, then you'd have to get law changed. That's not something you should do in Chapter 11.
I get you, but it's like, that a lot of people say, okay, now we have to even give 70 cents for a token, which is actually useless to most of the people, right? Or like most of the people don't even have it, see it useless, and they now need to say,
Can I
okay,
stop you there? Let's not
yeah.
debate it. Let's follow the law. There's no change in the law.
Okay.
If you want to change the law, then go for law reform. I've been doing that all my life with securities law reform. It takes about 3 to 5 years to get a change in the law.
I think you're right.
Yeah, we don't need to debate it. The law's already been written. Now, yeah, so, was there a question around whether I would do the sell token or anything, or?
No, it's again, I just try to understand. I totally get your point. This is the law, and we don't want to. Yeah, we cannot go against the law, and we cannot also change the law. So
We want to get out. We want to get out of Chapter 11. There's only a few ways of doing this. You either give people their sell token, which, from my perspective, means that you're persuading the examiner the US trustee not to be able to distribute a token that's involved in a criminal investigation at the moment. You're then asking them to allow the community to have a race to zero as soon as they release the tokens, where some people may not be able to withdraw it on time, and the speed at which it is withdrawn, then everybody has a race to find out whether they can sell it. You then got a scenario where the Treasury would have to make a commitment, the company would have to make a commitment not to dump it on the market. All of these, and then you've got the whole insider clawback. So remember, you can't distribute the funds without ensuring that they're not the proceeds of crime. There's a criminal investigation going on. So then you'd have to freeze those funds in the time at which the investigation's going on to make sure that insiders don't get those until the actual results of the examination are over and the investigation. All of that would lead to just such a delay in us. And remember, we've also got the model of what happened with Voyager. Voyager just said we can't deal with the token. And so that was part of that. So we got to just model success. We've already got a model of what works. So why don't we just model that, because we know it works?
Simon, I agree with you again. I think just a lot of people will think like, okay, 70 cents, even that they have to pay 70 cents for this kind of token, they will find unfair,
Well, it is fair, because that was the price of the token at the date of petition. And that's what we're using for everybody. So treat everyone fairly.
Thank you.
Now, there's an assumption here. Here's the key assumption, right? Everybody thinks that this is where I'm trying to get people. If I could just make one shift in people's thinking, and I'll try and cover this again in video 6. Everybody right now is fighting over scarcity. That's because the game has been set up where there's not enough coins, and therefore we all need to fight each other. But what if we flip that on its head, where we create something like a fund that some people may not even want their coins because they may want more of that fund? Now we're not fighting on scarcity, we're deciding on abundance. So let's say some people just don't value the fund and other people's do. Then some people would be saying, I don't want my coins, I want a fund. I'm a non-accredited investor, and Chapter 11 gives me an opportunity to have a diversified fund. So if we make that fund as good as we possibly can make it, then some people might say, well, this is my shot to get a diversified fund that is a Bitcoin play or a crypto long play. And therefore, some people might say, well, I've got a bunch of Bitcoin outside the app. I've got my coins outside the app. I actually want to get access to this fund, because the only way to get access to this fund is as a creditor. You can't get access to it any other way. Then we could create a scenario where people are really thinking about which one is right for them. And a bunch of people like me would just say, well, I'll take 100% of the fund and I'll give up all my coins. I'll give them to custody. or I'll give them to someone else. If we can just get the percentages right and understand that we're only playing with two things here, how much fund do you want and how much coins do you want? And then we can just create marketplaces. So we don't need to make it this complicated. We can significantly simplify. I'll cover a lot more on this tomorrow, but these arguments come from because we're fighting over scarcity rather than thinking of abundance. And that's what I want everyone to shift to. If we can use this bidding process to get clear that there is some value here and people are going to want that value, and the only way to get in is to be a creditor. Some people are going to say, I wish I was a creditor. I wish that I could get access to this. I'm going to have to wait a year to buy that fund on the secondary market from somebody that wants to sell. That's the key. Then we can come, I don't want to beat the horse and say the same thing again. Okay, next person.
Hey, Simon, you mind if I speak?
Go for it.
So I have two questions. One, and I'll preface this by saying I've got no economic interest here whatsoever.
But you've watched the videos? We seem to have lost you.
Hey, can you hear me?
Hey, Simon. Oh, go on. Keep going.
So my general question is, at what point do you think it's more beneficial for the community and everyone's economic interest to stop?
Sorry, we keep losing you. Does someone else want to come in? I think we've got a bad connection.
Hey, Simon. Do you hear me? Hello?
Oh, sorry, I was on mute. Yeah, can hear you.
Oh, yeah. No, I actually have a question that's kind of related to what you were talking about.
Is his connection still gone?
Oh, do you hear me?
Yeah, I can hear you.
Okay, cool. Thanks for the videos. They're super informative. I think I kind of got lost in what I was asking yesterday, so kind of riffing off what Daniel was saying. What I'm actually asking is not if there's a conflict of interest with loans, but if a bid is taken, will there be an opportunity for the loans to basically be paid off and then the collateral be moved back into custody where it could be handled as such?
Sorry, ask the question again. Will the say it again?
Will there be an opportunity for the loans in Celsius to be paid off so that the collateral will be released into custody and treated as custody to where it doesn't have to be, pushed into SALT lending or any of the situations that have to do with loans? Will there be an opportunity to basically get those things?
So
those funds
what I would suggest is that those loans find a new home, and then if they want to be paid off, they can be paid off there. But if the suggestion is that, if the suggestion is that you'd like those paid off first within the existing, the existing entity can't reopen, so they have to go to another entity.
Okay, so basically, if you were to win the bid, they could not be paid off and then moved into Bank to the Future as custody.
No, because then the money's going back into the estate, and you've changed the value of the estate. So, the bid would be that everything's moving to a new home. If it was all done in how I suggested.
Okay, I got you. Thanks.
Yeah. So, and then there's the end result is I'm pretty sure that it would be as long as you can. All right, I'll cover more in this next week. But, yeah.
Cool. Thanks.
Thank you.
So my question for you is actually related to the loans and custody stuff as well. Hello?
Yeah, we keep losing you, unfortunately.
No, what I was going to say is...
you're going to need a better connection. You keep jumping out.
Is this better?
Right now, it keeps going.
It just seems like, the token is probably kind of less of an issue at the end of the day, hopefully, just because the community is kind of aligned on sort of not wanting that, besides a couple of members, which I know still details need to be ironed out with regards to that. But it seems like, the custody and loans is really is really something that could, if they really feel that they're not equal to the earn customers, that could be a big roadblock, I feel. So I was kind of wondering, I think one of the things you had said was that there could be a way for people who are more interested in getting, more equity and less coin to potentially express that and kind of use some of their coins to add to the
So
pool,
there's
right? So I'm kind of wondering, is there a way to do that, kind of as a part of a
absolutely.
comprehensive restructuring plan, and a way for, earn customers to express that interest? Because you probably want to show people that it could actually happen, right? That, maybe custody and loans could potentially be close to or
Yeah.
completely whole as a result of kind of this reshuffling that might occur, right?
Again, there's so what we're trying to say here is that there are two things. There's your coins, and then there's a fund. Some people would want more exposure to the fund, and other people will want just their coins. So if we did it. This is how we did it at Bank to the Future, right? When we did the Bitfinex deal, it's slightly different, but we can do a similar thing. We had some people that just wanted out and didn't believe that Bitfinex could repay, and others wanted to convert into equity in the future of the company. And so by allowing them to spend that token into Bank to the Future, we essentially created a mechanism for people saying, well, I'll just keep I'm going to dump my claim, or I'm going to hold my claim, or I'm going to invest it into the company. Now, we could do the exact same thing. We've already done that before. So we did that in 2016. We could do that where we could have a pitch on Bank to the Future for those that want to take a bunch of their coins and give it up for more of the fund. And then that could be balanced out to those that want custody, or those that need to have their collateralized loans.
Gotcha.
So if we're in the mindset of using financial engineering, which is what we did at Bitfinex, we can just solve our problems quickly. The alternative is we just do it through court, and we don't need. It's not one or the other. We could create some technology straight away out of court that would allow people, just like at the moment, people are selling their claims, for like 25 cents on various other platforms. Once we know that this is, once we've kind of hit consensus, we could just create that same scenario on Bank to the Future markets where everyone can indicate that in the future they're willing to, post settlement, move their earn claim on their tokens over to the fund. And then if we can, once we know the parameters, we can just set up the technology where people can do that, and you can make it, binding agreements, or we can make it even indications of interest if we just want to do an experiment. So yeah, the sky's the limit as soon as we set the rules in the game, and everyone understands that court is always the worst way of settling things. Most things are settled out of court because it's much better. But yeah, we can do it both ways at the same time.
Yeah, I mean, I would concur, right? I think if we wait for the courts to settle this, that'll just be more, I think, more legal fees every day that get burned, right? So it's always better to kind of be proactive and have a solution,
Yep.
instead of going down that road. But I think it'll kind of depend on what the ad hoc committees, after, I guess, whether they're sort of willing to compromise and kind of come to a
well, we're all
consensus,
talking,
right?
and now they know. Now they know that technology exists. Before they were just in scarcity mindset of how do I get my chunk of the pie for my clients. If they know that there's a bigger pie, and we have technology in order to figure out who wants to give up, or who values. Here's the thing: it's not giving up. Once you've got given up, then you'll have, I feel, screwed. If you can move everyone to which asset is in line with my preference more, then we can start figuring out, well, where do I want to be, as opposed to what do I lose.
Right. That sounds good. And I guess related topic is, are the tax implications of that something? I know you're not giving tax advice, and your videos are not going to, but is that something you might touch on in the future?
Tax is the most important part of this case. So everyone that's requesting things in courts right now, they may actually be fighting for something that's very unbeneficial for them because they're not thinking of the whole macro solution. They're just thinking of the tiny part. Right. Actually, in the end, this is actually just a tax case. Because if you get the tax wrong, this could be disaster for creditors. If you get it right, everyone can be in the right position because there's a lot to play with there. Now, that's very complicated because tax is different for every jurisdiction. But what I want to do on video 7 is just help people understand the simple questions to get answered, rather than leaving this as this big unknown and everyone's fighting in courts when actually they might be fighting for what they don't want.
All right. Well, great. Thanks. I will turn my mic off then. Look forward to the videos.
Awesome. Okay, who's next?
Hey, Simon, I'm going to ask you the same question I asked Zach a few days ago when he was talking about his plan. Being as objective as you can you think of a person with some collection of products in their possession from Celsius that might look at your plan and say, this plan is not good for me? Just FYI, when I asked Zach that, he said, look, I am a participant in every product that Celsius offers. So I created a plan that's good for everybody. And so such a person does not exist. So I just want to pose this exact same question to you. And I'll leave it at that.
Yeah. So so what I've done is I've spoken to all the Ad-Hoc groups. I spent hours and hours and hours trying to figure out what the key problems are. When I developed this, I just simply thought of carefully how to solve and address all those issues. We've identified who the different constituents are. You've got people that own Sell Token on the app, people that have loans on the app, people that invested into the Earn program, and people that were put into custody against their will, and then people that voluntarily went into custody, and then people that were in withheld, and all of them were misrepresented and missold. And so all we need to do is figure out what's important to these people, but not from fighting from a place of there's not enough, how do I get my piece? If we could actually think of innovation from there's two assets, there's my coins and there's a fund, then all we need to do is get the preferences right. And I believe that there's enough people whereby you can balance those out so that people do get what they want. But everything we've been doing prior, and I know I keep saying the same thing again, is fighting from a place of scarcity rather than fighting from a place of abundance. So that's what I think changes the game. So yeah, you're exactly right. I mean, have I missed anyone off that list of parties? Then you've got all the other players that I talked about. You got management that have their legal issues. You have the company that wants to sell all the assets and get rid of all the liabilities, Celsius. You've got the UCC that's meant to represent creditors, but at the same time, they don't want to make a high risk move if they could get a low risk, unless there's a much, much bigger upside. Then you've got the professionals that all get paid, and maybe they want to get paid into the future. Then you've got how to maximize the assets. So when I created the videos, I was trying to say, understand what the different players want. And then maybe there's a way of putting together a strategy that works for all. And then we can speed up the process. But then you've just got to have one final distinction, which is that we're not fighting for scarcity. We're deciding based upon which future we would like to be in. But yeah, if there's anyone in that...
Go on.
Okay. Who's next?
Hey, Simon, can you hear me?
I can hear you.
Yeah, I had a question regarding the distribution of equity to non-accredited US. Do you think that's an issue, or like the number of users we have is 300,000, and giving equity to non-accredited US. Do you see that
Yeah.
as doing
So go to video 3, and I created a matrix of, but no, it's not an issue. As the issue is administration. So at Bank to the Future, we have technology to manage that process and get votes from everyone when you have hundreds of thousands of shareholders and distribute funds to them. So you, and then get corporate action. So throughout the years, we've had about 25 different corporate actions that happen for a company. And if you're distributing all those funds, then you need efficient technology in order to facilitate that. And then, so no, there is chapter. We've already got a legal opinion that there is a way to achieve that, and that's as a non-accredited US investor, we've got an approach that we think using Chapter 11 will allow us to distribute a fund to you, and then there's after a 1 year lock-in, have the ability to sell that to somebody else that might want to buy it from you.
Okay, thank you.
The issue is that you won't be able to use the earn service until an additional S1 filing, which can take years. But it's not that it's not that you can't get your coins and you can't get your fund, or that you can't sell your coins, withdraw your coins, or sell your fund. It means that there may be certain products into the future that you couldn't use. So that's just as a future customer. And so I tried to create a matrix to understand that there's only a few things you can't do.
Thank you.
Pleasure. Okay, anyone else got a question?
Yes.
Sure, I do. If I can go, if I'm up, I don't know.
Yeah, sorry, I don't have a moderator, so I'm not as good. But yeah, go for it. Whoever.
I have a very quick one. My daily conversation with you, Simon, I love it. I had an idea or a question. If you could, when you do set, assuming you win, which we all hope you will, we win if you win. I think it would make your proposal bulletproof in winning the hearts and minds of creditors, even more so than it already has, if you include I don't know what you would call it, the payback amount or the balance that is owed to the creditors, not the balance that would be the balance pre-pause. In other words, I had X Bitcoins before the pause, and then they paused the company, they crashed the market due to their malfeasance. I had 14 Bitcoins blown out. I think because of their actions that my balance shouldn't reflect what's in my account now. It should reflect the balance I had in the account prior to the pause. And there's a lot of people, that's the liquidations group. I'm sure they've been in contact with you if you've seen them. So if you're at this point, if you were to include that number in the recuperation number, and we all know you're going to do everything you can to get our money back, that would make you just win the hearts and minds of a whole new group of people that we necessarily haven't been talking about so far. And that's my statement. And thank you. And my question, thank you.
Yeah, so we have to follow bankruptcy law, which means you have to dollarize the debt, and we had to do it in Bitfinex. There was no way that we could take on a Bitcoin debt. So if you took on a debt of 119,000 Bitcoin, and then it went from $300 to 69,000, you'd put the company back into Chapter 11. So what this is you're looking for, if you had Bitcoin. So let's say you've got, you said you had 14 Bitcoin and now you have 7 Bitcoin, just for in theory. You're looking to have a fund that can essentially, you're tying it to your alpha of the price of Bitcoin. And so you will be judging the performance of the fund relative to Bitcoin to find out whether you are up or not. And so you could have a user experience that does that. It'll be pretty tricky. I understand the desire to do that. But yeah, it'd probably be easier if you just put, I had 7, you just put on the spreadsheet, I've got 7 Bitcoins, and then if you, and then the value of your fund, and then you measure the alpha. Because yeah, ultimately, that's what we're trying to design here. We're trying to design a high risk, high return, diversified play. That if everything goes right and Bitcoin goes up, then it either goes up with it so that you're potentially compensated in the same way, or it outperforms it, which is what happened in the Bitfinex side. But yeah, you'd be measuring what you had before relative to what you end up, and that may be more or less,
Sure.
yeah.
My worry in the short term is, and this is not really your problem, it's mine. First of all, I have a lot more than the number you mentioned, but that's okay. I know you're just throwing numbers out there, but so I had 14 Bitcoins blown out when right immediately after, as you remember, they closed the firm.
Oh, do you mean the liquidations?
The liquidations, right? So now I'm looking at, for the next year's tax problems, I've got 14 Bitcoins blown out. I have a cost basis that most people would fall down if they heard me say it out loud. So now I'm looking at. I had no intention of closing those loans, that the 14 Bitcoins. So I'm looking at.
And was this because it was in bankruptcy and you couldn't send funds, or just because the price crashed prior?
Well, the price crashed because it was pre-bankruptcy but post-pause.
Yeah. Okay. So it was basically you were in the pause had happened.
Yes, sir.
And then you're ultra skeptical about whether to send some more.
Yeah, I mean,
you didn't get a margin call, so you didn't send any more money in. Is that correct?
I did. We did get. I mean, there wasn't even enough time for a margin call because it happened so quickly. And what is very upsetting to me, again, not your problem, I'm venting here, was that when we crashed, what I call COVID day, when we crashed from, I think, 9,000 to 3,800 that day. I don't even remember, in March of 2020. I have so much dry powder to support the loans that I had, and I moved dozens and dozens of Bitcoins into my collateral account. And then weeks later, because the market came right back, I moved dozens and dozens of Bitcoins out of my collateral account, and no loans were liquidated. I simply could not do that after the pause, because one, you couldn't really move money around. Two, it was a fool's errand. And by the way, I've been chastised by some friends for swearing when I speak on these things, so I'm not going to do that anymore. It was a fool's errand to move money into a company that paused withdrawals.
Yeah. Okay. Of course. So, is there an ad hoc group for that? Are you all in one place?
There is.
Okay. Well, let's make sure your group is involved in all the conversations. Is there are you the leader of the group? Or?
I'm not, but they are. Let's just say David Adler is involved, and they begged me to, because they know I speak to David, who's obviously been a big hip. So he's actually going to be represented. As far as I'm concerned, if I don't, I had X Bitcoin before the pause. I truly believe you're going to get all or most of it back. But whatever that balance is that I don't get back, I am completely convinced that I will be able to sue the founders for their personal assets. I'm not an attorney. I did go to law school. I do have a JD, a Juris Doctorate, and there's a gigantic whole semester on piercing the corporate veil. If you own a company, the whole purpose, as you know, and everybody else on here knows, if you incorporate, you're protecting your personal assets in the event that there are lawsuits. But if you act fraudulently or so negligently that you cannot, the corporate veil could be pierced. So this is what I never understood about how negligently. I don't think Alex and company did any of the stuff on purpose. What I'm shocked at is they would act so negligently that this would happen, that they've risked their personal assets in the process. That I never foresaw them doing, because they're not stupid. The whole thing is a shock, but I'm getting my money back. If I have to sue them for their personal assets, I'll do it. I don't want to. I don't have any ill will against Alex or Nuke or Dan. I think they're my friends. If I see them, if we get through this and there's a lawsuit and I'm suing them personally, and I see them at a convention, I'm going to still say hi, shake their hands. It's not personal. I just want my money back. It's for my kids. It's not for me. I can live in a cardboard box. I got kids. You know how it is. All right, I'll stop. Thank you so much.
Yeah, I'd say you don't at the moment. People in your situation with liquidated loans don't have a seat at the table, so let's make sure you get a seat at the table. Is there a lawyer representing the group, or?
I can't speak for David Adler. I know he's aware of it. I'm not going to go as far as he's representing them, but I can't imagine that he doesn't want more business, because this was, probably a couple of $100 million blown out. On that day. It happened in 5 minutes. We were at 17,600 for 5 minutes. And then this is the best part: when your loans are blown out, the excess collateral got put into your custody account, right? So
Yeah,
it's just a shit show. But so I broke my promise. Anyway, I'll stop talking now. I will take your advice and let David Allen know that. Thank you so much, Simon.
Okay, great. Thanks for letting me know.
Hello.
Hey.
Hey, can I talk? Yeah. Can you hear me?
Oh, sorry, I was on mute. I was speaking to you. Yeah, please go ahead.
Yeah, all right. Thank you. I just wanted to say that this tweak, that looking from a standpoint of abundance is really the way to go forward. And I wonder, in order to make that even more appealing, is it possible to have a, let me say, pre-distribution selection where you can say that, okay, I have these kind of assets and I'm entitled to 45% of my earn account into coins, but I forfeit that if I can get shares in the fund instead. So that means that there will be, I think there's more people than me that see the potential if this fund is constructed the way you have described it. And I would certainly do that. And I would do it for my sell and my earn. And all those coins or that asset value could go to help people who want more coins. Pre-distribution, is that possible? And the second question would be that, is it possible to do, let's call it, intra-trading secondary market between creditors only before the 1 year holding period, also to facilitate this liquidity for those people who need it?
Okay, great question. So now we're thinking from a place of abundance. We're coming up with solutions, which is awesome. It's just a mental shift. So yes, so then if you could think about it, and this will tie into, we're really leading into my presentation tomorrow. You've got let's say a company that needs funding in order to win a bid. You've got your coins and you've got a fund. And if we had a dashboard whereby people could say the percentage, so in terms of your coin distribution, you've got a maximum of, let's pretend it was 45%. And then you could push it down and say, well, I'd like to put X amount into the company that wants to win the bid. And I'd like to put X amount into the fund. Then we're suddenly filling in the holes. Or we're suddenly, people are giving their preference. Now, the good thing about this is that Earn is by far the largest creditor. So they've got about I think their haircut is approximately worth about 2.1 billion. And so that's a lot of people that invested in risk that I'm sure would love to, if they saw the opportunity with a full disclosure statement, and they were they were suitable in order to be able to make that decision before, then they would give up a percentage of their coins because it's so easy to get the coins off an exchange. So yes, you've got the exact type of thinking to do this. Now, in terms of the inter-creditor secondary market, there's a challenge, which is that the way that we would utilize this is US law requires a 1 year lock-in. Now, some non-US laws don't require a 1 year lock-in. It's only as little as 3 months, some none. But I think my preference is let's just get everyone in for a year. They've got their funds. Let's get everyone in for a year in order to really, not just go straight into the process, and let's not treat everyone unfairly where US are locked in and non-US are not locked in.
I agree to that. And especially if we can do a pre-distribution selection, that is not so interesting and not required any longer, I suppose.
Yeah. Once we've set up the game, we just literally, you can imagine a dashboard where you say, this is the percentage I'd like here. And then the challenge is, how do you get it where they understand what they're selecting? And that's just disclosure statements. That's what we do at Bank to the Future.
Yeah. Now I wanted to ask you one more question about the structure of that fund. So if I understand correctly, the fund will own presumably 20% of Bank of the Future, and also then a percentage of the business entities or the assets that is put in, because the assets we talk about are supposedly revenue or business entities putting in, not necessarily just one. It could be, one company like Salt, the mining, the GK8, whatever it is.
Yeah, let me try and help you there. So again, imagine it as a venture capital fund. So if you're an accredited investor, you could go to Pantera Capital right now, and you could invest a minimum of 100K into a venture capital fund, and they'll give you a 2 and 20 model for getting exposure. And then they go out and they find all the different companies and make sure that you're invested in everything. Those would be a long-term, high-risk, high-return investment. So imagine that we were doing that, but the difference here is that the investments have already been made. So it's a fully invested fund. And within that fund, you have a bunch of valuation of all the assets. So the UCC, the investment banks, at Celsius and the UCC, they'd be valuing all of these assets now using conventional models. And then there would be a valuation for those assets. Now, one of the 3 ways in which to hit a potential home run would be that you have a mining operation that may or may not be well structured right now, that may need reorganizing, may need new management, may have existing management, may have challenges that need to be solved. We've seen lots of that in the public information, that company is reorganized with the fund manager in order to aim to make it a public company like other mining companies. If that all goes wrong and it enters into Chapter 11, it's very asset rich because it's currently mining Bitcoins. Obviously those are being spent because it's not profitable. So we need to get it into a reorg. But also the fund manager works with the management team in order to figure out what capital they need. It's a business and they're accountable to a fund manager that works with the board in order to put together a strategy to maximize that.
Yes.
That's why you need a skilled fund manager working with the existing board, accountable to a creditor committee.
I understand that, but I wanted to understand the ownership structure of that mining business. Is that 100%
100% by the fund?
Yeah, so here is where I wanted to look at that, and maybe this is feasible. So as long as you limit investment into those separate vehicles by venture capitalists or investors, you could raise capital there without really infringe on the steering of those vehicles. Let's say the Bitcoin mining. You take the non assigned miners and you ship them to El Salvador and make a deal with the government. They get a piece of the company and give free energy for 1 or 2 years or something. And then that vehicle, the mining company, is now owned 80% of the fund and 20% by, for instance, El Salvador or whoever goes in. But you have a limit that you cannot sell more of each vehicle than that the fund maintains the control. By doing it this way, you would get funds into the bid and also
so that's just simply, these are very well-known things. So a professional fund manager would know what clauses are in there. So at Bank to the Future, when we invest in a company, we look for preemption right, drag along, tag along, information rights. And so it's not that you prohibit somebody from issuing new shares in order to dilute, because every successful company should be diluting if it's succeeding. You don't want to kill a company by not allowing it to dilute. That's the opposite of success. That's an amateur move. So what you want to do is you want to allow them to, for example, if the board are selected and they're accountable to a fund manager and the fund manager knows what they're doing, then they may say, well, we need some share options in order to attract this talent. And then that gets vote. This is why we need professionals. We don't just want these funds managing themselves without real skilled people. And then they may say, yeah, we need to do a capital raise, which dilutes, and then you just put it through the normal thing. So if they want to dilute, then they have to go through preemption rights, and then you could launch a pitch on Bank to the Future and give everyone the right to reinvest so that they don't get dilution if they wanted, or they accept the dilution because it's a higher valuation in an up round, and therefore the overall part of the pie, it adds the value, it increases the value of the fund. And we all get very well educated in how these things are working because it's the first time that everyone got access to such a thing.
But would you have a limit though on how much dilution is accepted?
Yeah, every company has a fully diluted number of shares. But what I'm saying to you is that's the job of a professional. And you just have a governance structure whereby they have to get vote as they make such decisions. That's what we do at Bank to the Future all the time. So we're 100 different companies, and they need to get vote, and we have a mechanism for everybody voting. That's what you need in order to manage this well with 300 to 600,000 people. But you want to make, at the end of the day, I understand everyone's desire to kind of create like a DAO here or something. But I actually do believe in professionals being amazing at what they do and paying the right people to do. I don't try and have an opinion when my doctor tells me. If I trust the doctor, if I've got a shit doctor, then I've got a shit doctor. But if I want the best people in the room to make those decisions.
Yeah, I agree. I just wanted to understand how you foresee it working, but then it's the way I think it should work too. So that's fine.
Yeah, so we do it that's why I'm saying don't just do it amateur hour where you just put the assets in a company and think that they're just going to make money themselves.
No, absolutely not. Yeah. I agree, and especially because there are actually businesses that needs to be managed properly. So that's absolutely true. But as I always say when I talk to you, right, the important thing is just to respect the property rights in the entry phase, so the business enters with trust.
Yes. So you'd have good agreements that are put together with the typical type of investor protections that we put in on Bank to the Future. That's something we do.
Yeah. Okay. Good. Thank you.
Who's next?
It's John Q and then me.
Hey, JK.
Hey, good morning. Simon, so I was wondering how this might affect our recovery plan. I don't know for sure if you have, a thought on this. I've read a lot of tweets. Let's say we wake up, and there might be some things, well, there's a lot of things probably beyond our control here, but if we were to wake up tomorrow and all of a sudden, it's all over the headlines that Alex Mashinsky or any of the top brass has had their Bernie Madoff moment and they've been taken into custody, or, let's say Alex grows wings and flies. How does that affect or what do you think about that? How would that affect our recovery plan? Would that immediately throw it into a Chapter 7? Are you there?
Simon, you might be on mute.
Sorry, I'm muting myself. Thank you. I don't think I'm qualified to answer that question. I'm not a lawyer. I think it's a complex question. I don't think there's a straightforward answer. All I can say is that the faster we get through this process, the less likely we are to be in.
Okay. Yeah, I figured it was maybe out of the realm. You just read a lot of tweets about this, and it is a concern because that is out of our control. And there is probably, in my opinion, a high probability, that something like that occurs eventually. But okay, well, thank you. That was my only question.
Hey, Simon. Quick question. You've been tweeting about accredited users signing up for your platform with over $1 million, and that you'll pretty much figure out retail users later. Can you explain that more?
Yes. So next week, I'm going to be going on capital requirements. So for full transparency, BF Global, our parent company that owns Bank to the Future and has like the letter of intent with Salt and everything, we we have a plan. Basically, this would make us a much bigger business if we were doing anything like this. So we're going to be going on a capital raise, and so that's got nothing to do with recovery of whether non-accredited investors and accredited investors, if anyone adopted such a plan, would receive shares in the fund or anything like that. So those are just two completely independent things. But at the moment, yeah, we're BF Global is going to be doing a capital raise. So we were just shouting out to anyone that is an accredited or high net worth investor to get their accounts ready to see if they want to be involved in BF Global in the future.
Okay, so just to be clear, that's recovery versus future of Bank to the Future.
Yeah, so what we're doing is at BF Global as a business, completely independent of this. We're going to be doing a capital raise to high net worth and accredited investors.
Got it.
Because we want to grow our business, and that's got no connection to the whether like you end up. Let's say we ended up in a winning a bid or anything like that, and then you end up receiving shares in a fund. Non-accredited US, non-US investors, we believe from our legal opinions that there is a completely feasible way in bankruptcy for being able to receive a fund. The hardest part is the technology of managing 300 to 600,000 people, all the corporate actions, all the voting, and everything you need in order to manage that well.
All right, you said think, but you don't know.
Well, I don't want to commit to something, but I'm I've got legal memos. It's still got to be signed off by the judge. I've seen cases where this happens. We know that the ways of doing it exist, but I can't sit here and guarantee you something.
Okay, yeah, I mean, there's just a lot of talk about it around the community about how it seems like there's going to be retail customer neglect. And
No. Yeah, this is a sensitive topic. The reason I created the matrix is I just want everyone to see what we think they can and can't do. And non-accredited, accredited, US and non-US, as long as they go via a regulated institution, we believe that as long as those entities have all the licenses that they need, then there is a way of distributing funds, and by funds I mean crypto assets in kind, and that there is a way of distributing a vehicle that we, let's just call it a fund. I don't want to. There's different ways of structuring it in order to make that possible. We believe it's totally possible, and that's why we're pursuing this. And that's why we suggested it.
Okay, just wanted some clarification on that. All right, that's all I had.
Yeah, but if anyone is an accredited or high net worth investor, this is not a solicitation or anything. But make sure you create an account on Bank to the Future, verify and certify your account, because we're getting ready. We've been on a 1 year pause while we were applying for all sorts of additional licenses and rebuilding our regulatory technology in line of new securities laws. And so, yeah, we'll be doing an offering at BF Global. If anyone wants to be a part of that, then we'll be sending all those high net worth and accredited investors that have accounts on Bank to the Future further details to see if it's right for them.
And don't forget to pick up Simon's book.
You want me to do a shill for the book? Yeah.
No, I'm kidding.
No, but I do want to shill it because I tell you why. It's actually
there you go
for free. You can buy it on Amazon or you can get it for free. retirementplanb.com/book. But I do want to tell you, it is uncanny because I went back and read it. I think it was Eric from the custody group that said, I put together a prophecy for how banking would be done in the future. And it said that you separate custody accounts and investment accounts so that people know that they're not rehypothecating their money when they deposit at a bank and they can own it. And the exact business model that is being proposed as this reorg is the exact model that was proposed in the banking reform once you have governments issuing currencies, which is the there wasn't a word for it then, but it's called central bank digital currencies now. Once you issue them and bypass the bank, and how to have a bank that doesn't create money when they issue a loan, and how to correctly disclose the risks when people have their funds at risk versus when it's in a riskless thing. It said we need to have 7 different technologies, which was crowdfunding, peer-to-peer lending, digital currency, internet, mobile, smartphone. So yeah, I am shilling it because I find it quite remarkable that we are where we are, and that was covered, and that was the first published book in the world to include Bitcoin.
Okay.
Thank you. Thank you for giving me the opportunity to pitch and shill.
A joke turns into an actual shill.
Yeah.
Simon, here is my question. So I get it as key point from myself. For takeaway is okay. We replacing this absolute scarcity with the option. The fund goes wrong, right? Or what we said, we have like 100% of the mining business in that. Even when that goes wrong, still we would have the Bitcoin on the balance sheet. We then could distribute. Of course, this means also that we run the business mining quite efficient. But another thing, what I actually really wanted to ask, when we go this and you have a big following, we currently know that they have 280 people employed at Celsius. How many people do you have? Can you speak to that? Especially from the technology side. Hold on. And how many people do you think we need? Thanks.
Yeah, great question. So the first thing is how do I think about the fund? I just want to cover that because I think it's really important. Again, this is just an idea, a theory. But if I were to put together the perfect fund for giving people exposure to the growth of the industry, I would want a proof of work play, which is a large Bitcoin mining company. I'd want a proof of stake play, which is a company like GK8 that benefits from offering staking services and custody services. And then I'd want a diversified way of getting exposure to all the different companies in the sector, which is essentially what BF Global does through its platform. And then I'd want a bunch of other assets, and there are a bunch of other assets like private equity and various other things. So I'm excited by that, which is why I'm willing to give up a lot of my Bitcoin in order to have full exposure to that. That excites me all of a sudden. So yeah, that's the fun. And it's got to be diversified. You can't bet this whole recovery on one operation. That's just insane. If it all goes wrong, then we'll be back, in disaster mode. That can go wrong, of course. Everything can go wrong. But let's have 3 shots at 3 IPOs. Let's have GK8, let's have BF Global, let's have the mining, and then let's have all the other assets. So that's that one. Then in terms of us as a company at the moment, so again, don't rely on any of this information. If we end up doing a securities offering, then there'll be full disclosure and full details of everything one would need to know. But just answering those questions, BF Global is a small team of about 50 people. Salt is a small team of about 50 to 60 people, I think. So combined, we're about 100 people. I'd be raising capital in order to double the size of that team. And a really good way of, personally, I think if we were involved in the process after being able to manage all those assets and create a company over a structure that we mentioned, there's probably a bunch of people over at Celsius. But I think the key thing there is regulators would want to see them go through a new process, a new HR process. Those assets that they may hold that are being distributed would want to go through some kind of compliance process as well. And that's why it's important, I think, for them when distributing funds that it's done via someone that has a very robust AML process as well. And I think we'd all want that, so that, yeah, so we'd be looking to double the size of the team, but I think we've already got a lot of the systems technology, and then you just need a bunch more developers that understand any of the other technology and work on integration.
Thank you. Yeah. So again, how I understand that your plan actually delivers me more diversification into the fund, into the coins which I get, and actually also improve work cases, which are really important for the fund. And it also then would actually provide us the needed liquidity for, even you have to wait a year, but you for sure have your coins. Because I just, for me, it's important. Again, I do not want to speak up. What's that?
Which, if it's managed well, should grow with Bitcoin, and if it's managed very well, should outperform Bitcoin.
Yeah, let's see that. So, because Simon, what I wanted to highlight again is like, I don't want to bring up Alex or the management or all that stuff. The point where I agree is, from a technological point, spoken from a technological point, is otherwise, when this really goes, we need a place to really make this mass adoption. It's not that everybody has to hold their own private keys. Okay, this is the only point where I agree, because I'm working with this technology in 5 years, and yes, it is complicated. And when everybody would have the time to first figure it out, what it really is for a responsibility to hold private keys, that would be beneficial. Thank you.
Yeah, my thoughts on that is we created an online wealth management program and we had people like Andreas Antonopoulos create the whole training on how to set up your private keys and how to diversify, where you diversify between custody and private keys. The reasons why I'm fighting for our clients that set up retirement plans, and Celsius was the partner for the yield part, but none of them are wrecked. They're all calm at the moment because they were fully diversified, and this is just one part. But I'm still fighting for them because I feel like we if I've got anything within my power, I should try and recover it for those clients. But yeah, the point is, that's where what I'm ultra excited about. This is where I geek out. Is when we come out on the other side of this, and we get to actually put a lot of people through like these wealth management programs, and they set up their own financial plans, and they diversify. And this is like literally, if I could have picked an audience that are going to understand and appreciate the importance of this, and if everyone stops trying to make money across 1 year and starts actually putting together a 10-year plan, I think this could be one of the best moments that happens to everybody if everything goes the way we want, as long as Bitcoin still survives. Okay, who's next?
Not overexpose myself, but again, the problem up here is all who are here diversified with the wrong platform. Okay, all this diversification and stuff is useless if you have at the end someone you cannot trust. Thanks.
Well, no, that's not true, because I was a shareholder in Celsius and I invested in something that I couldn't trust, and it didn't blow me up because I was diversified. So diversification is the key.
You're right. Yeah, of course. You do not diversify only with one platform. Okay, I get it.
Yeah. Okay, who's next?
Yeah, Simon, if nobody else is now, I just wanted to ask regarding SALT. I see Sean is on as well. So if they take over the loan book, can they deal with that, considering they're such a small company?
Sean, would you like to answer that? I'm not sure if he's... I'll invite him to speak anyway.
Yeah, okay. So...
Sean and his team have been working very aggressively to analyze that, they think that they can.
Yeah, can I ask you another thing? Well, because it hangs together with funding in the same way. Now, could it be a choice? Because I know a lot of loan customers probably are very close to margin calls or close to have a hard time to maintain their loans. Is it possible for those people to pay off, get the collateral, that money goes towards the funding of this whole bid?
I'm not sure I understood the question. So you're asking if people could pay off their loans and then use their collateral to fund the bid?
Well, let's let's say like this. I consider the collateral to be the property of the borrower, and I consider the principal and interest to be the property of the estate. Now, in order, if you want to transfer the whole loan book across, you will obviously have good loans and not so good loans. Those who sit in a position where they can pay off their loans for various reasons, but they might be, very close to a margin call. If they pay off the loan, there's suddenly liquid capital available straight away that could be used for the bid or for the
it feels a bit ambitious. I think the loan book would all, the loans and collateral, I think that would all be resolved post bid. I don't think you could resolve that pre bid.
Okay, I just thought to enable to raise capital.
Yeah, it's just a practicality thing.
Okay.
Yeah, you'd have to have probably money and earn in order to explore those options. Yeah.
But I mean, you couldn't send in money then, just US dollars straight in.
Oh yeah, if anyone's an accredited or high net worth investor, they've certified their account and they just want to make an investment with new capital, then yeah, that's what we do at Bank to the Future.
Yeah, no, but I'm talking about loans here. Let's say you have a loan that is virtually on margin call or close to being liquidated. If you send in the principal, you get the collateral, and the principal is now available for this whole restructuring.
No, this would, all of that would be restructured post bid. You can't restructure pre bid.
Okay, I see.
Yeah.
All right.
Yeah.
Thank you.
Thank you.
Hi, Simon.
Hello.
Hi. I just had a quick question around the general nature of playing out our overall strategy, sort of 100% in public here. Now, we watched all the videos and AMAs, and I'm 100% behind what you're doing. But I do get concerned that the other people listening would be Sam and FTX folks, and they're certainly listening to the strategy and trying to figure out, well, how do I one-up that? So I know there's a dilemma here on getting everyone on board and figuring out the best strategy, but it still could come down to a competition where, they just don't simply put a cash offer on the table. They try to one up everything that we're all trying to come up with here. So I don't have an answer, but I just have a concern on how do you come up with the best strategy without tipping your hand to the competition?
The answer to that is I can only come from a place of abundance. And if the end result is that somebody else creates an amazing offer for all of us, then so be it. I came into this in the beginning and said, I think I can solve a problem for this community. And I've just been as transparent as I possibly can. And it's been an incredibly challenging thing. And I've just reached the stage right now where I'm saying, if I get sued, I get sued. As long as everybody gets a good recovery in the end of this process, then that was what I came. And the reason when I first got involved in this, I came up with a very specific mission, and I said depositors first. Now the word I should have used was creditors first. But I just understood the word to be depositors first. If the end result of all of this is I get a great result for my clients and my funds and everybody else, and they used our strategy, then for me it's enough just to be able to write a chapter about how FTX copied us in my book, and I'd be incredibly satisfied. And my hope would be that a bunch of you would come over and use us later anyway, because of the trust that we built together, and that would be enough for me. But yeah, would I, could I get into my non-abundant mindset? I don't know. This is just about let's just stick to the mission. Creditors first. If somebody else can do better, then they can do better. I'd love to be the person that could do that. I think I could offer, a leadership role of my philosophy and integrity that I think would be non-tangible. But if people don't want it and they want other people, then I'll go back to servicing my clients at Bank to the Future, and people can invest in that independently. We'll do a funding round for SALT as well and get them where they need to go and all that type of stuff. So whatever happens, as long as it gets a better result for creditors, then I think our job is done.
All right, I follow that. Thank you. Appreciate it.
Who's next?
I can go next.
Go for it.
Yes, Simon, with the new company where you're offering custody, if somebody was in that custody and God forbid the new company went bankrupt, would the custody crypto be protected from the bankruptcy?
Yes, that's the difference with custody. When you do it fully regulated as you're meant to do, it doesn't sit on the company's balance sheet. So Celsius put all of our funds on their balance sheet, and because you.
Hello?
Seems he broke up, huh?
Hello, I'm back. I got totally disconnected. I'm sorry about
Yeah,
that.
so do I. I keep getting muted for some reason.
No, I'm sorry about that. So
Yeah.
I just want to
Sorry,
understand.
where did I stop? I don't know. Was I
Oh,
quiet
just where
for a
you
while?
said that you said that yes, the crypto would be protected, and you said the difference between the new company and Celsius is Celsius commingled the funds, and you're saying so that would disqualify
Yeah,
it.
so custody, this is the legal argument in the court. Custody means that you fully segregate those and change title to those, and you treat them separately and you can't use them. You're not allowed to use custody funds.
Is
You're
that
just allowed to store them.
is that a statute? What legal precedent are you setting there?
Well,
Because
that is what custody is. You can't use, if you use someone's custody funds, then you've broken the law. So
so
in
you
at Bank to
can't
the
have
Future,
commingled funds
at
in
Bank to the
custody.
Future, we can't use our client shares and start lending against them. The client shares are the client shares, and we have to have a process within a regulated framework of how we would deal with disaster recovery and business continuity. If we go bust, then another custodian has to take over that relationship, and we have to have that in place. And that's what happens with a regulated institution. You don't have these surprises. You have a well-defined process. And what Celsius did is they kind of just, just operated outside of everything. And so there
Well, I
was
mean,
no
I
process. We
understand
are
that,
where we are.
but also you're saying that because it was commingled, it's different. It doesn't matter that custody wasn't getting any
Well,
income
no, but
from it.
that's the argument in the court. They're saying, yeah, the terms and conditions say custody, but it was never treated as custody. Potentially, it was put in earn, and
So
so
you're
was
saying
it custody?
treated potentially, and my point is that whether it was commingled or not, it was stated that it was, and in the terms of service, it was custody, and that you owned the keys, right? So I mean,
No,
here
you
they're
didn't own. You didn't own the keys. They were storing them for you, and they were investing them.
excuse me, you're absolutely right, but you own title in custody.
Yeah,
You had
You're getting to the crux of the debate, and this is what the examiner will be saying. And if you listen to what the lawyers said before, they were saying, well, there's three things that constitute property, and we need an examiner to do discovery to figure out whether those three things were true. Were they segregated? Were they uninvested? And did they have legal title? And what they're going to argue is, were all three met, or was only one of them met? And is that enough? That's the debate. That's what's going to be settled in court.
What was the first one you mentioned of the first
Don't
qualification?
quote me. I just remember it from one of the things. Yeah,
No,
I
I
remember
understand, but
it was in the
I don't
first
think.
town hall by the UCC where they were discussing the three things that constitute ownership and property rights.
Uh-huh.
So yeah, I'm not a lawyer, but I just remember hearing it.
No, I know, but I think you're bringing up a point where what you're saying is because the funds were commingled, that means that they weren't custody, and I don't think that's documentable. I don't think that there's case law on that. Do
Yeah, so
you?
that's either going to be set. Yeah, no, custody. The definition of property will be defined in law, and the how you treat custody is as a regulated or non-regulated institution is defined by law. So you're in a lawyer question. I'm just
No,
sharing what I know because I run a business where you have to segregate client assets, and if I touch them, I'm in big trouble.
Right, but you're under different regulations than Celsius was, right? And so you would have to rely on what their terms of
Yeah.
service was and what they were saying it was. You know, obviously we know that Celsius did a lot of things. Actually, you could count on Celsius to do the opposite of what they said, but that doesn't mean that custody is determined by whether it was commingled or not.
Yeah, and this is why we've only, you know, getting back to, I don't want to go through the legal argument because there's much more qualified people than me to go through that. But there's two ways this is going to get resolved. It's going to get resolved in court, or it's going to get settled where we all come from a place of abundance and realize that maybe we don't want our coins back, or maybe we don't want to own our coins because it may have a tax consequence that we may not like. That's what I'm saying.
That's way above my pay grade. I would say you are certainly the most versed person in this. But you have mentioned that you thought the people in custody had a case that was different than the people that were in earn. Is that
Yeah, and
accurate?
well, the judge is saying that. The judge is
Okay.
definitely saying
Well,
that.
do you think they do?
Absolutely. I mean, if
Okay.
you're in a
So
custody
in that
service, you've
case,
got a case.
would you be willing to make an offer of, like, say, 90% returned to custody? Would you be willing to negotiate with custody to get everyone in custody on your side?
I'd be willing to sit with the head of the groups and their counsel and see if we can hash out a deal.
So that you're willing to
Already
hear
started that process.
Okay, great. Thank you very much, Simon. I appreciate your willingness to put yourself out there. I really do. And take care. Thank you.
Thank you.
Good morning. Can you hear me?
I can hear you.
Yes, Simon. First of all, I want to say thank you so much for everything you're doing for every one of us. My questions today is gonna be on the loan that was liquidated. One of my biggest loan was liquidated, but I'm not sure if you have mentioned anything regarding that. And I would really love to hear what is your plan for people who were liquidated during the past.
Yeah, what I'd say is that as long as you've got an ad hoc group and counsel, then make sure your voice is heard in, because all the ad hoc groups are getting together right now to figure out how they want to deal with that. So that's another, you know, there's but people that were liquidated, they need to make sure that their voice is being heard and they're coordinated, and there's a leader of the ad hoc group, and the council is in the conversations. I think my understanding is David Adler might be a part of that because he's doing the whole loan things, but just make sure you have a leader, you got coordination as a group, and you're all together voicing what you want.
Okay, yeah, I'm on the Telegram group, but it's just that I have not heard you talk about it more, and I was kind of a little like confused with the whole situation.
Yeah, basically, there's all these ad hoc groups, and we're either going to settle in court, or there's going to be a negotiation between the leaders of the ad hoc groups representing their clients.
Thank you.
Thank you.
Okay, may I have a chance to speak? Hi, Simon. This is Mega. I was curious to know what you plan on doing about governance going forward. Do you foresee having community members involved in that process? And also, are you interested in having the transparency of the board meetings or any meetings that you have being either recorded or some way for us to be able to access that information?
Yeah, so I covered, I think it was video 3, where I went through a suggested governance structure. So I suggested you have a fund manager accountable to a creditor committee that could also use some of the advisors from the UCC if needed going forward. And then you have a bunch of companies that are accountable to the fund manager. And so one of those companies would be, if the structure was followed, BF Global. The other would be a mining company, and the other would be GK8. And then you can have an investor and creditor committee, and then you just simply have the normal governance process. Now, for example, Salt, as part of their SEC settlement, is a public reporting company. Now, that's hard to achieve as a very small private company, but if we're going in that direction, we're growing towards, the next 2 to 3 years trying to achieve an IPO, then we might as well get started with the types of standards slowly over time. Do you want to mute yourself? It's a little bit noisy.
It's not me. Someone else, they all have to mute. You're not muted.
Okay. Someone needs to mute. How do I mute them? Jeez. How do I do that?
JD, you have to.
Okay, I got rid of JD.
Yeah, I think.
I need a moderator.
You do. The other question was about the transparency question. As you know, at Celsius, we were really in the dark about what was going on. What do you foresee as being the best way to show the transparency? Either, recording the board meetings or publishing some sort of information that's actual fact, as opposed to what we had to deal with.
Well, I think board meetings is too challenging because you often have to recover regulatory things and stuff like that. But as a philosophy, I've always tried to achieve what Ray Dalio tried to do, created with his hedge fund. I think it's a really amazing model. And so as an HR principle, I think that's an interesting thing to follow. But there's private company standards and there's public company standards. And if this is moving towards being a public company, then we might as well try and aim towards those types of standards. But yeah, I think the reason that we entered into a letter of intent with Salt is because we realized we can't have a lending partner where we don't have access to those financials. That's what we learned from Celsius.
Correct.
We didn't have access to the financials, and therefore we were exposing our clients to risks that we couldn't control.
Correct.
And so we had to put a securities business and a lending business under one roof, so that when we're actually talking about securities and disclosing, we actually have access to those financials, so that people, and that's why it has to be done under one roof from my perspective.
Right. Just because we dealt with the situation that was so opaque to all of us, and we ended up in this situation. So any kind of transparency that can be offered, I think, would be very reassuring to all of us going forward.
Yeah.
Thank you.
Thank you.
Hello, Simon. Can you guys hear me? This is Moxbox.
I can hear you, yeah.
Hi, Simon. Appreciate everything that you're doing for us. Just to give you my background, I'm impacted by earned custody and borrow. And I did read your book about 1.5 years ago after watching your interview on Real Vision. And it was a real game changer for me in terms of becoming a Bitcoiner. So I thank you for that. So, and I obviously I recommend the book to everyone else who's part of the community.
It's a really old book, though. It's 12 years ago. So
not 12 years ago, 1.5 years ago. But still relevant, right?
Yeah, when I wrote it was 12 years ago.
Yeah, it's incredible, and we're dealing with it now. But the question that I had is, I've been following, everything that's been going on so far with all your videos and everyone else that's impacted by this is that, would the Cinderella story be to somehow be able to preserve the equity of the Celsius name, and also use this really opportunity to strengthen the use case for Bitcoin? So meaning, any sort of a haircut that we all have to take, rather than distributing and splitting up into Bitcoin, Ethereum, or whichever case, just convert it all into Bitcoin. And again, since there's really no regulatory clarity on, whether a cell is a security token or not, why not just liquidate everything and convert it into Bitcoin? And so that we get some kind of a PR in terms of what Celsius is doing for the reorg of implementing a Bitcoin standard in terms of how to settle this kind of a commotion in that sense.
So my reason for not doing that is my personal belief is that Celsius is a toxic brand now. I think it's associated with deep pain, deep destruction. I personally, cannot relate to that brand after this, and so for me, I think that's a really bad idea.
But again, the only reason that we're all still not giving up on this hope is that the only people who are trying to recover the Celsius brand is only the people that are impacted by this, right? So that
I don't think anyone's trying to recover the Celsius brand. I think everyone's trying to recover their funds and trust.
I know
I don't
that,
think Celsius has any trust.
But I'm thinking, what if we can be bigger than that? Because one of the things that
there's
Zach
there's
had
plenty
mentioned,
there's plenty of marketing books out there that will tell you that when this has been attempted, it's been a disaster. Yeah, I really think it's a bad idea, really bad idea. That's my perspective. But when you try to recover brands where people have, like, a financial institution that caused this amount of pain and suffering, where people have, like, you want to wipe the slate clean, and you want to build a new brand of trust. That's my perspective. And there's
but then
plenty of
again,
use
is
cases to study marketing books where people have tried to revamp a brand where and that's even Celsius agree on that. That's why their plan was a new brand.
So then I guess my question to you then is,
imagine if you're trying to trust your retirement funds and then you're searching Celsius, and
again,
there's all of this fraud allegations and FTC and SEC and I don't look. This is financial services. This is serious. This was my biggest complaint. That you need a certain level of responsibility in the leadership, that they really, really take people's money seriously. And all of the problems in financial services, and normally when a culture is created of not fully understanding how, the moment that we took investors' money at Bank to the Future, it was such a serious decision and a serious commitment to holding ourselves to a standard whereby we would put things first before. The reason I'm here is because of that. And you really need to instill that as a culture, and the Celsius culture didn't have that.
Okay, that's fine. And so then in this reorg process, where would the businesses fall under? What kind of at least a branding sort of a strategy behind that then, once you dissolve the Celsius name?
Whoever wins the bid.
So let's say in case we win the bid.
Who's we?
We as in the plan that you're putting together.
So that would be Bank to the Future.
Yes. Okay, so that would be the umbrella.
Yeah, so if FTX wins the bid, FTX. If Bank to the Future win the bid, Bank to the Future.
And then SALT would be the company that would be handling the lending business because it has all the proper licenses.
So SALT does lending, Bank to the Future does securities, and then you've got the custody side and money transmitter side and various other things.
So then how about my other question regarding the Bitcoin standard, where all the haircut distributions are just cleanly and simplified using the Bitcoin ledger to handle the distribution, or the percentages of what's...
Yeah, I think it would be, if I were just thinking of myself, that's what I would do. But then at the same time, I think you want to avoid the politics. So if you go back to video 1, I talked about the neutrality side. One, proof of stake. There is a lot of debate around proof of stake and proof of work right now, and you don't want to take a side, because then you get into a debate where everyone starts arguing. Bitcoin and ETH are just pretty regulatory neutral, but there's politics as well around ESG narratives and various other things. And then there's a bunch more ETH than there is Bitcoin. So taking unnecessary risk where you need to. In fact, I'd more favor moving towards trying to get to a ratio of everyone's assets that they started with, so that you remove the claim that one of these assets pumped 5,000% in the time you were doing this, and then you took out their position. As neutral as you can get it. So I believe that ETH and Bitcoin is the way you'd get more consensus than if you just went, let's just do Bitcoin. But maybe I'm wrong. I don't know how to.
I think for this, I think it would be a great thing if we can take a vote, because again,
but remember,
if
there's a business case as well. So imagine you're a shareholder in the company, and there is a reorg company that's moving into custody. There's a most people are probably going to want to take their Bitcoins and put them in a private key, and put them in a ledger or Trezor. A lot of people are going to want to stake their ETH. And so they might be more likely to say, and there's a business case of why the group might want to do that as well. So you got to think about.
I feel that more the investment play, the trade play, the degen play could be part of that investment portfolio. Could it not be? If it's, taking the staking opportunities and the trading opportunities with the fund manager?
Yeah, we've got a huge, no, listen to, we've got, if this is pulled off in the fund, you've got a huge, imagine how much better you could make GK8 as a custody business if everyone ends up putting their ETH in there for staking.
So that once you get the haircut at distribution, then you can take those ETH that, let's say you received, and put it right back into work.
Yeah, all the funds would be held in custody. If we were, as a creditor committee, owners of GK8, we'd want to put them in custody at GK8. My forecast is a lot of people are going to want to withdraw their Bitcoin, but a lot of people would probably want to keep their ETH for staking. So we've got to think about what's right for our business, and that's why I think you do it 50-50.
Okay, so then again, with this reorg with Salt and Bank of the Future in play, how is it all going to be glued together so that the UI feels seamless, going from lending, borrowing, earning, staking, and all that?
That's the challenge.
That's the challenge.
Yeah, that's the hardest part about this,
yeah,
and I can't wait to be on the other side of actually.
And that's my primary reason why I brought up, if there's going to be any sort of equity left in the name branding, because one of the things that I did like about Celsius is the app, and it became my central hub for my crypto assets, right? Because they did have a very innovative product and made everything seamless. It was the terrible management portion.
Yeah, they
right?
did, unfortunately, but it's very easy to great user experience if you're willing to misrepresent and do illegal activities.
Yeah.
If you want to do disclosure, that's a lot.
But I get it. I fully support you. So under your plan, going with the Bank of the Future and just figuring out how to combine all these businesses together. And again, I really appreciate everything that you guys are doing. And and you gotta really appreciate all the community, that all the people that are involved, because none of us are giving up. So
yeah. And I just want to say as well, like all of what we're doing here, having these discussions, are very uncomfortable, very strange, very transparent, and actually, on borderline complete disregard for the bankruptcy process and contracts and all sorts of stuff. So you gotta help it that I'm just giving here as much as I can, but every question I answer puts me under a new risk. And so we're in this new process that we need to really reinvent this process afterwards, because if this becomes the process in the future that all creditors hash it out and use financial innovation and technology to solve a bankruptcy, then this is just such a fascinating process. I think that's a department in itself.
Yeah.
And it seems like we've got lots of expertise within our company now that know how to do these things.
Yeah. Yeah, and I hate the fact that everyone's involved in this situation, but I'm really glad that you're on our team, Simon. So thank you again.
Thank you.
Simon, I do not want to front run someone, but I would like to come or ask you really to hash this out, a deal between the current custody coin holders and how this will be in the future. And why I'm bringing this up is, again, everybody who read the Bitcoin, and also the gentleman just said, with all this education, the coins get more and more important. And I think Max Box is already way ahead of a lot of people when he just focused on Bitcoin. But I leave this aside. But of course, I would also assume when I'm in custody and I trust my funds and I don't have my private key, of course, should I get my keys back? And what you said, you do not earn out these coins and so on. Of course, then we have to know what is the cost for really storage them or put these coins in cold storage. I mean, that the gentleman from custody asking this is totally a valid point also going forward. But it's currently really difficult, right? Because we have not enough coins. and then we would really distribute all these coins to custody, yeah, then it's even less for the people in earn. And here's the point why I'm bringing this up. I was waiting for this for over a year because I knew, okay, custody, yeah, when I have a bank account, some banks over here already charge me $5 for my account up there. And I know that security costs, but I never had the chance to even move my coins. Okay, so your solution was I have an investment account and I have a custody account. I was waiting for this and it never came. And just guys, also for the community, does Celsius has kind still something left in his brand? Guys, I really also liked the app, and again, from an IT perspective, I want to create something where people come back, where people interact. All this had Celsius. Now we have to ask how real was this dashboard, and that's, I mean, also why we should focus more on this matrix, what you can do and what you cannot do, that we understand this. And when it comes to is anything left, guys, the question or the challenge was what Alex always said. I want to bring 1 billion people into crypto, in our industry, because it's a great technology. He did exactly the opposite. So for me, there's nothing left.
Okay, who's next? Thank you. I'm gonna take 2 more and then I'm gonna jump off. I just wanted to come on for a bit.
Hey, Simon, this is John here. You said there was someone from Salt here on the line?
Sean's listening, but maybe he's being told off by his wife because it's a Sunday and he's not allowed to speak.
Oh, so I don't know if I'm going off topic here, but I just had a thought here that I'd really love to see, if this Salt thing works out, or I really like the fact,
Who can we mute? Sorry, there's a lot of noise. Let me figure out who we got to mute.
Yeah, it's not me.
It's Max Box.
I'm trying to mute it, but it's not working. Okay, great.
Okay, so the whole concept of being able to borrow against your Bitcoin is fabulous, and because the U.S. is kind of leading towards this being a commodity, or has, with Salt, I would really love to see. Maybe it's a little too early for this, but an idea for the future, and that might come quick. But since it's a commodity like your home, it would be great if they could set up some type of almost like reverse mortgage product with Bitcoin, where you can just, if you've got a lot of money, you got whatever, $500,000, $1 million, $2 million, whatever in Bitcoin, you can sit there and just pull a monthly payment out of it automatically. That's just deposited into your account like a reverse mortgage. Just a thought, but I'm hoping some kind of something like that can be created for the future. That would be awesome.
Well, that's the thing, though. Once the way that I see this is, we've got, again, as a empire building vision, like the execution is obviously the hard part. We've already got enough to execute, but if we can build that company and get this up to a public company together, you really do have the reinvention of every single financial product eventually. Now, the good thing that I always liked about Bank to the Future is, once you get in empire building mode, you really you really realize how much opportunity there is once you've got hard money, and then you have to build everything again on hard money, and then you've got all the crypto and everything that comes from it. But what I had to figure out a long time ago, that I got really excited about this, but Bank to the Future, when we created a platform whereby there are specialist teams that are building every single product, and we can just fund them, and then we end up a shareholder through a beneficial interest in everything. And that's how I built my diversified portfolio. So rather than trying to do everything, which we will obviously try and do, but you can take the parts where other people are specializing, do a funding round for them on Bank to the Future, and then we collaborate as an industry. And that's essentially what we have been doing, is putting together all of our different portfolio companies to work together to build the whole thing, rather than trying to do everything ourselves. And so that's why I've been over the years, I've just been a gluer between different people in different industries, and that's the beauty of it. If we can't do it, we can also fund, and we even have competition that we fund on our platform. So I'll give you an example. Securitize is in the same market as us, but we collaborate really well. And we just funded them, so we became shareholders in them, so that whatever happens, we grow together, because there's such an abundance of building and creation to be done in this industry, and that's why it's really great having a securities platform. It's the most diversified way of getting exposure to the industry and diversifying yourself by having lots of people invest and share the risk.
Wonderful. Yeah, it sounds possible. It sounds like anything can happen with this new financial shift. So, yeah, keep up the good work. Thank you, Simon.
Okay, I'm going to do one more question and I'm going to jump.
Hey, Simon, and hey, one note, thank you for all the work, and actually every single person in this Spaces room. It's amazing the brain power that's coming together through everybody. Actually, pretty inspiring.
Oh, we lost you.
Sorry. No, I'm back. Sorry, I just saw that. I don't know how much you saw. But anyway, my question is about the Bitcoin and the ETH. I understand you're trying to go 50-50. I'm pretty heavy in USDC. So my question then, not necessarily.
Lost you again.
I don't know why my thing keeps going to mute. Yeah, it keeps going to mute. I don't know why. But anyway, so is there going to be a new cost basis when, if everything gets approved and all assets go into Bitcoin and ETH, will we all get that same price at that point as our cost basis?
So you're talking about tax, right?
Yeah, I mean, I guess I'm talking about tax, but I'm curious as to where let's just say I bought Bitcoin and my Bitcoin cost basis right now is $200, right? And but then with all this, when everybody gets distributed Bitcoin and ETH, and now Bitcoin is 20,000. So is my new cost basis going to be 20,000, or would it still be the $200, right? And it's not really what my cost basis is. I'm more USDC, but since I paid taxes on that money and transferred it over, I don't want to have. I'd like to have a cost basis that's current, so then if I need my USDC, I can basically sell it immediately, and it would be a minimal tax one way or the other.
Yeah, I think it's really a tax conversation, and so yeah, I think that would be a very important consideration in terms of how this is actually done in the end. I think there's a model for it. So I just suggested an initial model. I'm getting lots of feedback that in kind is the way people want to do it. But then you've got the challenges of rebalancing everyone, which is another challenge. So there is actually, rather than reinvent the wheel, what we might want to do is just look at what FTX did with Voyager. And that got through the process. So maybe we don't reinvent the wheel and we just have a look at that. But I do think that my initial suggestion, I think it got us to the conversation, but I do think there's a bit more conversations to be had to get to the final solution on how you distribute. And tax is a huge part of it, definitely.
Okay. Yeah, I agree 100% with that. That's why I was just kind of curious what if since everything kind of starts fresh and we're buying all the Bitcoin and ETH at today's prices, that would be kind of distributed around all the creditors. And it's like, okay, this is your new cost basis, and then that's it. But obviously, I get it completely. A lot of us might have got into some coins early, but some coins late. And yeah, are you going to have?
Yeah, I think we really need to reach. I will eventually, but initially I'm just going to do the piece of it that people need to understand. The problem is it's just global tax. Everyone's going to be slightly different individual situations. So I've got some ideas, and we are actually getting those tax opinions done in multiple jurisdictions as an exercise ourselves. But we can't share those.
You're
unfortunately.
Awesome. Thank you.
Yeah. Okay, awesome. So, right, I'm going to bounce off now. I just wanted to come in for a bit on Sunday. I went over, as always. I'm going to be releasing video 6 on funding and clawbacks, and video 7 on the things we need to think about from a tax side. So really excited about finishing off the video series. This week was a huge week. I hope we all agree that there's just been massive progress. Really, I think it comes down to 2 decisions in the end. Do we like this whole creator fund, and how do we create it as diversified as possible given what we got? And the second is, how do we initially distribute coins? Then it's just that third part of how do we negotiate the ad hoc groups, and whether that's going to happen in court or out of court, and whether we can fast track that process. I think it just comes down to those 3 decisions. And I think we've made progress, and I think we know what we need to do. Yeah.
One more thing I wanted to tell you what I saw in the morning, but I just went over it briefly. Look, there's also a bid now. Justin Sun, right, from Tron, also throws his hat in the ring. So they interviewed him. Okay.
Cool. Okay. All right. So, everybody, we'll see you on Monday. Thanks, everybody.